Alrighty, guys, welcome. About to get started here in just a minute. I think the mic is working okay. Let me just make sure. Oh, oops, sorry, guys. Alrighty, guys. Welcome back to MTV TA. I'm your guys' host, Trent Manager. All my returning patrons, of course, welcome. All my new patrons and new viewers, welcome back, of course. Really glad to have you guys here on this Tuesday. Wow. Of course, we got another jam-packed Tuesday of news. You know, guys, we can't go literally one day without having something brand new or an already existing topic that needs more coverage. But really glad to be here. I'm glad you guys are here. But just go over our quick agenda, what we're going to be covering today. I know we're starting earlier than usual, and most of you guys will probably just watch this, towards the end of your day, which is of course fine. But I just kind of overlap meetings this morning, but of course no worries. We're going to talk about why the recent China Fud is pretty good for Bitcoin. We got some details on that. It's to see, mining pools and, mining cartels moving out of, China and moving towards around the world. Also going to be covering some U.S. news on that as well. We're going over, we might not be going over why Elon planned for scalability. We might take that for another video. SEC, we're going to talk about Bitcoin's ETF approval, long overdue for the ETF in the United States, especially for the Bitcoin section. We're also going to be over Goldman Sachs, thumbs up for crypto as an asset class, which is also really, really good to hear. And Saylor, we're also going to go over Michael Saylor and his tweets between Mr. Musk and him. I don't like bringing up Elon as much as I do on this, but sadly enough, he makes the cut. He's just been making the cut every time, just because he's still got such a big grip of influence. And we're going to talk about that, how that could be an issue, and how I think we're going to be kind of stirring away from that. I think he's kind of going to be losing more power as he kind of stretches, his ability, and he keeps kind of reaching for the fence. So it's going to be a pretty, medium to short video today. I think we're not going to be in here too super long, but we're going to be covering some good points, so definitely want to stay to the very end. So, alrighty, guys. So first off, we're going to hop into the recent China Fud. For everyone who's been here recently, relatively long enough, especially recently, you definitely were here when we encountered a lot of the FUD and a lot of the bad articles and readings, over the past couple days. We had the China Fud come, and then, we had the renewable energy source from Elon, which caused a big issue, and then, kind of just pile on, bad, really, really bad news that, you just don't really want to hear. And, it's kind of like kicking someone when they're down. It just makes it even worse. It's probably going to break a little bit more teeth. But as to why this is a big deal, and this kind of makes things better, for mining essentially. So I don't know if we covered all in this article. I don't know if they had all in depth, but just from what I read, and I could just, spit back the information I read, is that, a lot of hash rate, of course, is in China. Hash rate is just the confirmation transactions of, BTC mining, and a lot of those miners, moving their current BTC onto exchanges, and that's how, we are to mine our Bitcoin, for a short version for all those who are new. But the reason that this kind of plays such a big role is, number one, they're cracking down in China. There's a couple different laws that they kind of implemented, and the China ban is a difficult topic because China does bans, and it's not something as you would think, like, okay, well, you're banning something so you can't use it, correct? No. Okay, let's take a step back. China does something where they kind of incorporate it a little bit differently. They'll put it, they'll have restrictions for regulators and higher net worth investors, and even for local people, they'll kind of space it out, and that kind of gives a bad rap, at least around the world, when people get headline titles wrong and so on. So usually when people think when China bans Bitcoin, that it's completely all across the country, and no one can ever do that. But realistically, China mining BTC in Mongolia is actually illegal, but that's still pretty close enough, to Hong Kong Republic. And Hong Kong Republic technically isn't part of China. And I know how crazy that sounds, but, I had to do some reading on that as well, is that Hong Kong definitely kind of separates itself a little bit by laws, which is always different. It's very different how it kind of goes in China. But getting back to the article as to why it's a short article, but as to why this is going to be good is that, a lot of these big Chinese mining cartels and pools are, looking to be moving out of China. So they're trying to move their hash rates out of China and, kind of, get away, from, all the mess that has been happening. The big good pluses in China is that, you can have local storage, so you can go get your local equipment, fairly easy, versus here in the States and other places it's harder to get, the graphics cards and the equipment, just because it's, most of that stuff is produced there. And, with a lot of these miners is that, they're already working towards, renewable energy sources. We've talked about how the green narrative is already scraped because a lot, pretty much majority of miners use 75% renewable energy. And the reason for that is that, when you're mining, your biggest consumable is power. You want to go find the cheapest power so you're not, paying more than you're actually mining, versus power, because that does take a lot of watts. So, using renewable energy and, increasing solar panels or nuclear, anything that you're going to do to make things greener, at least in your operation, is going to save you a quick buck, and also, going to deplete the narrative a bit. So we're actually going to cover this a lot more. We're going to head on, but I got a chart and it covers that. We're going to go later on into that as to, how that green narrative is still a thumbs up. So continuing going, we're going to go over Bitcoin's TA as to here. We are actually not out of the woods just yet. Before we get off here, we're going to go through the charts as well. But Bitcoin TA as to why BTC could struggle to surpass 37K. We talked about this last live stream as well, and over the weekend when we had our literal meltdown, when things were just absolutely going out of the window. There's a lot of fear. Actually, let's check on our fear and greed index today, because I did not check, but I think yesterday we were still pretty red. Yeah, we're at 22 today, so a lot higher. Still extreme fear. We got extreme fear all throughout the month, as far back as we can really go. So, that can be understandable. But some of the main reasons as to why we should definitely be cautious, and we've talked about this through the charts, is that we have not had we have our weekly close, we already had our weekly close, but if we do have our monthly close, because it's towards the end of May here, and we are below our $40,000 resistance level, our EMA line. So if we go down to here, I meant to circle this, but for some reason it didn't. But our technical indicators is hourly, the MACD. MACD is slowing the gaining the pace of the bullish zone, which is true. Hourly RSI, the RSI is still well under 50, so that means we are a bit undervalued in terms of what's going on right now. Major support levels 34,000. We talked about that, followed by 32, which is also very true. 42 was another big level for us before we broke through that and kind of found our way down into the mid 30s, and we knew that was still a possibility. And major resistance levels 35, 37, and 38. I could agree with all of these, just because we now have to flip a lot of these support levels of resistance. And the common question now is, how did we free fall so we just fell down so quick, but in realism, when we hop into the charts, guys, we're gonna I don't even need to hold off. We can see when was the last time that we even touched 42,000. So if we go to, just real quick, I'm just doing this for example references. The reason we fell so quick, if we're being 100% real, take this section right here and now measure this back with our support level. Let's just do when was the last time that we built up solid support? So even this matches up pretty well also. So comparing the two, we had a nice stepping stone up. These are all daily candles, by the way. So each day, and we've got a lot of green in there. So we didn't really build any support between our break upwards and on our breakdown. So we didn't even establish official, like this. I don't know if you guys remember this rally right here this was after our January crash. So that was our 48%. That was our first major, big correction. And that was the real kind of mid shakeout, and then we had a massive rally, and then that was a while ago. I know that's kind of hard to remember, but definitely wanted to kind of throw that out there for learning purposes, that we just didn't build any support. And that's the problem when you move up so quickly and you get overextended very fast, is that you don't have time to establish these levels as a solid ground. So that's 100% part of it, which is okay, but that's okay now that we're having this pullback now, and that things can settle down and we can slowly make our way back up. And that's part of the process, guys. That is the cost of performance. That's the cost of performance. When you get something that performs 10x in 15 months, you're going to have that type of movement on the downward. What goes up must come down. And we have talked about that plenty of times. And also, we're going to go over our SEC. Peirce says our Bitcoin ETF is pretty long overdue. The U.S., we've talked about this plenty of times, of how slow the USA is moving in terms of Security and Exchanges Commission for filing this ETF. Here, this is just a quote right here from, I don't know who quoted this, just because they didn't have any crazy quotes in the reading, but it's well past the time that we approve our exchange trading products in Bitcoin. Peirce said in Friday interview, we have a lot of information now that we did. Hopefully that, because we have a new chairman, and that's our interest in this space, will have a chance to take a fresh look. And also, Peirce Open Mind on digital tokens has earned her nickname Crypto Mom among enthusiasts. Traders have speculated that Gary Gensler, who took over the SEC chairman last month, will, of course, clear the way for the Bitcoin ETF and, of course, give his input on digital assets from Gary Gensler from MIT. And that we've talked about Gary plenty of times, and I've taken some of his courses. He's a very smart guy. He knows what he's doing, and I'm glad that he's an SEC chair, and I know he's trying everything that he can, at least in his power, to make this happen. happen. But realistically, the cards are still on the table, minus all the negative readings you hear from CNBC and just news in general, and that's why it's hard to really trust the news, especially and when I say like trust the news, I say trusted sources in crypto, guys. I'm sorry, CNBC, Fox, like a lot of those guys are not Bloomberg. I mean, even I hate saying that, but even Bloomberg, is kind of tough. With this crypto news, this is still an asset class that is fairly new if you really want to think about it, and that there's still not a lot of accurate news source informations out there, but of course there are a couple. Bloomberg isn't always bad. I should have not said that, but you just got to watch what you read, because you've noticed how the narratives have shifted quite quickly. From we've seen it with JP Morgan, the banks, institutions, Goldman Sachs. A lot of those institutional players have switched around their views quite quickly. We go from Bitcoin making 7 figures, then when things go wrong, or when things are down, we need a correction, and they're getting bearish and they're saying negative things. So that's just the run around of how it can go. So you guys already know that, but for people who are new, this is get used to hearing a lot of negative articles and things of people who may not know exactly what they're talking about. So, and awesome. We also got some more great news. Of course, we had a Bitcoin asset class confirmation from Goldman Sachs. So Goldman Sachs came out and said, hey, this isn't going anywhere. We've talked about this plenty of times. The Lindy effect is in action. The longer this technology stays around and it's utilized and it's given the time of day, is the more likely that it's not going anywhere. We've talked about that plenty of times. For all those who do not know the Lindy effect, please give a look on our Patreon, or just go look it up on Google. It's a very, very interesting read, and I think it's very, very good for overall. It covers non-perishable items, so it leans more towards the tech sector. So officially getting the thumbs up from Goldman Sachs was a big plus. We knew that they've been working with a lot of their higher net worth individuals for some time now, just trying to get the works in and really understand this technology. They had job posting listings for engineers and really analysts and people who really wanted to break this down to them and make sure that this made sense to them. A key concern is inconsistent and regulatory action. Of course, we can believe that. That's a big thing for these guys, but realistically, they have been here long enough to understand the ins and outs. But I can understand the slow pace that these older guys, or these bigger guys, can have, just because they got clients that they're working with, and it's going to take a little bit longer for some of these guys to turn the corner. And not saying that's always a bad thing, but we'd rather have them take their time and eventually get there than deny it to the point to where it just becomes almost impossible to break through, because we still see that in a lot of other places of governments not really budging and still not giving the thumbs up. But in terms of the the overall new asset class thumbs up, let me go. Who wrote this? Oh, Brian Salzi. It just gives us further catalyst. Kind of gives us that further rubber band pull. It's just the fact of them now noticing that this is not just a fad. This is still, we've talked about this often, is that they just still think this is Ponzi scheme, and this is still going away. But the longer and longer it stays, year after year, day after day, it still gets light of day, makes news stations, makes Wall Street, makes makes the news, makes CNBC. That just gives it more and more and more thumbs up and understanding. And the biggest part right now is education. So a lot of these guys are getting really, really educated, and they're trying to, at least, and that's going to be the biggest curve that we're going to have when coming over these hurdles. But not bearish at all, guys. I'm still bullish. I just give you guys the news as to what people are saying and what people are thinking. We follow the money, we don't follow the talk, because talk is words are very hollow from these guys, and overall in general, words are just hollow in general. So we follow the action. So when we see people moving money, buying stuff, coming out and showing us the records. I got out of that habit a long time ago of trusting words. People, oh, they're gonna buy this, or oh, man, Walmart's gonna buy this much of it. We can't follow that anymore, because we've seen, especially with Mr. Musk, the narrative change way too quickly, and the way that people can switch the flip, kind of just turn off the light and turn it back on. So, and also we're talking about Ray Dalio real quick. If you don't know who Ray Dalio is, he is Ray Dalio is what is his who does he own? Ray Dalio is an American billionaire investor. I forgot what hedge fund he does. Oh my goodness. Bridgewater. There he is. Bridgewater. He's a Bridgewater hedge fund manager, worth $20.3 billion. Wow. But he personally came out and said, hey, I would choose a Bitcoin over bond. That's a pretty bold statement coming from a hedge fund manager. Thank you for that, dude. I appreciate it. I don't know. I hope chat's not delayed, but yeah, dude, that's some pretty bold statements, I'd say. I'd rather have Bitcoin over than a bond. So coming from someone who's a hedge fund manager, so that's pretty thumbs up. I don't think I have the clip on here for the day. I don't think he came on just yet. I think he comes on Squawk Box this morning. I don't think he's on just yet. But while previously, we would have been incorrect, and we've seen a lot of these big guys turn the corner. You know, it's something that's not going away. I sound like a broken record, really. I really do. But this is just something that biggest hurdle that we're going to have is education. That's going to be the biggest hurdle because a lot of these older guys are not going to, they haven't even wrapped their head around the internet really 100%. And, you know, having something, of course, starting a project that's, you know, getting 65% done and then starting another project from zero, it's hard, you know, to grasp in that sense. You know, a lot of these guys haven't even figured out the full extent of, you know, what you can do with the internet. So plopping this in front of them and trying to get them to understand this can be definitely hesitant. But, you know, we're seeing this narrative turn around very, very slowly. You know, ever since the very beginning, since we started, we've seen people, you know, twist and turn, deny. And then, of course, eventually, you know, once the education comes into play, they've switched their narratives quite quickly. You know, it's just really about understanding. So, and also, I thought this was really, really important. We're also going to go over U.S. must-win CBCDC, was whole Tether stablecoin dilemma. So I think about Tether. So the whole Tether situation is interesting because we have tons of stablecoins. Tether, USDC, DAI. We have a lot of different stablecoins who are, you know, of course, still play the role of, you know, one USD backed dollar. But right now, I believe Tether is the if I'm going to choose anyone that's going to win the stablecoin race, I'm going to go with USDC. But then Tether has also been having its fair share of, you know, winning as well. So that mean massive purchaser or something of transaction. Like there's some argument with Tether. Sorry, chat's being weird. Yeah, so Tether, with their lawsuit that they did have, it was the problem that they had with Tether was that they were not correctly printing or minting the amount of Tether tokens that originally was had. So basically making them out of thin air. But, you know, that's a hard argument just because the government does the same thing. And it's hard to not regulate, but in terms of Tether's case, you know, with all the other stable coins in the industry, you know, it's easier to slip through the crack. Like we saw with XRP. Yeah, basically in the fact not yeah, basically fiat in a way, kind of in a way, and that's why Tether got such some slack because, you know, they didn't have the documents to back that up, and XRP was in hot water, and that's the same reason XRP is that, you know, it's harder, and Tether is, we've talked about this also, is that Tether is kind of in a way kind of like XRP, not in the sense of this functionality, but in sense of Tether being, you know, partnered with the government and having that, because XRP is it's made for the big guys, it's made for the banks and all those guys to have an easier way of navigating the system. But Tether is kind of on the same wave of, you know, being that bank's reserve, you know, of kind of leaning more towards that section. So they kind of fall in the same category. And I mean, it'll be interesting to see how it goes in the long run. I think USDC will win the race, but I think there's going to be room for multiple, for multiple stable coins to be okay, just because we made it this far and we haven't really had any problems. And actually, this is going to tie pretty good into the article that I'm literally about to talk about. So with the UBDC, the race to maintain the dollar and global reserve currency status, what they explain in this article is that the U.S., we need to win this race if the U.S. wants to keep our reserve currency. So that means, if for anyone who doesn't know what our reserve currency is, that the world depends on our currency for being the most valuable. So for anyone who didn't know that, when we go do oil deals and people who out of country do deals in currency, they're usually majority doing them in U.S. dollars. So there's no like, you know, I mean, the rare time that it might be something else is true, but majority of major big deals, such as like oil deals and land deals, weapons, arms, all that type of deal, are done in U.S. dollars. So we don't want to. No one in the U.S. wants to lose that reserve currency, because basically, when you lose that, it's like the world saying, "Hey, you're not responsible enough to maintain this, and we're going to take this away and give it to someone else who kind of is a plus." And the world has already came out, and we've covered this weeks and weeks about, you know, how no one wants to really do it with China. No one wants to really, they would like to keep it with the U.S., you know, granted, you know, all the issues that we do have, but we've established a good history record, you know, with the world in terms of our reserve currency. And especially with the terms of, you know, our digital transition of what we're going for, you know, and that's the issue of us being so behind on the blockchain and the stablecoin race and the digital asset race, is that it's going to be difficult for us to, you know, really come around this curve if we're so behind technology wise. And that's the biggest fear for these guys right now, at least in the higher state, that they're working overtime to make sure that this is in place and that this is doable for us, because if we're not up to par, you know, how are you going to compete with, you know, with countries and other people who, you know, you don't even have the first step done with people when people are 6 steps ahead. So let me read chat real quick. Also gives you, yes, absolutely, gives U.S. massive buying power in international transaction, 100%. 100%. It keeps us at that number one spot, and no one wants to lose the world reserve currency. Like any country who's had the world reserve currency, no one wants to lose it, because it's not only like embarrassing for your country, but like it just isn't good. It's just not good overall. Yeah, there you go. Developments are bitch buying power. Pretty good. Yeah, exactly. China's exactly. But didn't want to cover this too long. But this was super important for us moving forward. Is that they're working overtime. They're trying their best, but I do think they need to kind of work a little bit harder because we are fairly far behind in terms of blockchain and understanding and learning and just overall just adoption. We are very, very far behind. So I want to hop over to Lark's Twitter real quick. We're actually almost done, guys. We're really about to wrap up here. But hopping over to Lark's Twitter, I thought this was really important to share as well, just to kind of get some more bearish news off the table, even though we are not clearly out of the woods yet. But for the most part, miners are in accumulation mode, which means that they are waiting for the next major market pump before offloading supply, which means that miners do not believe that the bear market is here. So we've talked about, it seems like the split middle ground of people, like, oh, we're in a bear market. Oh, we're in a bull market. It seems like it's a very split catalyst between everybody. And this is where I think this is where my thoughts come in. Yes, and we've talked about, we've done so many readings and images of, hey, this is normal, 45% drop, 40% drop, especially in bull trends. It's normal that we see this, like we talked about the slingshot, last stream, and on Sunday, I believe that's what we talked about, is that, we take that rubber band, we bend it back, we, bend it back halfway, we pause, let our thumbs rest for a minute, and we pull it back as far as we can, and then we let go. That middle part to where we stopped, to take that break, that's kind of where we are now. We are in a bearish trend in a bull market. That is simply as that. You can have bearish trends in a bull market. There can be times where you can move sideways for a couple weeks and then ultimately make your way back up. We talked about it on the TA charts the other day, is that, this will not be a crazy V-shaped recovery. We will not just blast back up, in 2, 3, even a week, and get back to where we were. We broke a lot of levels of support that were once resistance, and we talked about that why earlier in the stream. We said that we did not build proper support levels on our way up from, I believe 40K till about 60K. We did not make appropriate support levels, and that's what happens. Absolutely. Base price looking nasty. U.S.-China confrontation beats you guys to near zero. That is the case, probably. Yeah. I don't know. Somewhat, because you got to think, because we talked about this earlier too, is that China has a big say, but China's banned Bitcoin over 400 times in the past 8 years. Like, if we total up how many times they've came out and said that, I think it's over 400. And a lot of those China pools are moving out of China just so we can get that spread out of hash rate. And actually, I think we got an article covering that as well, which is actually pretty funny. But going over to Raoul Paul, his tweets real quick, and then we'll go over to Michael Saylor's, because this was important also. Today was so far today, from what I've read, is a very big technical day. There's a lot of small technicals that are very kind of overskimmed, that people don't really know about, and that's fine. But this is a major one, because Raoul Paul tweeted this, and this is what he said. So something to get your head around. Headline: a major asset class crashed 42% in 14 days, wiped out 1.2 trillion in value, and an orgy of liquidation of people up 100 leverage. Leverage trading, that's what we talked about also. That's what people do with very low regulation. Many coins fell up to 70%, including unregulated lending and borrowing. Beneath the headline, crypto had a major VAR shock test. Nothing happened. Leverage liquidation was offset over collateralization. No one was left holding the baby. No firm went under. The Fed did not step in. DeFi did not break, nor did it crumble. There was no daisy chairs of collateral losses. There was no collateral pressure. Stable coins remained stable. Few exchanges went down for an hour or two. No exchange big losses. No protocol failed, and no firms needed rapid funding. So I'm going to stop there and kind of just, he kind of goes on a rant here. So why this is important is that he showed that from the biggest crash that we've had in such a short amount of time, that was, by the way, for anyone who's new here, that was the biggest 14-day correction we've ever had in history. Like, you just experienced first-time history. And not only did that throw our metrics out the window for years on end of data, like how it would work per cycle, that showed us completely something new. But now he's breaking it down even further, saying that we needed a stress test like this. Just like we had in March, we had a major stress test like this when people were running to exchanges, pulling off money, really not knowing what was going to happen, with the pandemic at all. And they had to feed their families. That was, when we had that shutdown, I don't know if you guys were here for March time or during that time. Some of you guys might have been. That panic that day was insane. Bitcoin lost 80% of its value. I mean, everything was red. That was a whole panic frenzy. That's a black swan event. That's something you cannot plan for. COVID, you couldn't plan for that. There was nothing you could do that could have possibly stopped that, or possibly hedge your investments any better. So realistically, what Raul says is that not only are we baby steps into this, and we have not even been close to collapsing. Like even on the stress test we had further back in March, and even this one that we just had, it just shows the strength and the foundation of just how serious this asset class is. Like we didn't have of course there are people who lost. There's always losers in the market. That's always how it is. But in terms of the Fed not having to step in, no collateral losses, no people literally coming out, at least big institutional firms of DeFi or anything along those realms came out and was having the Fed bail them out. It just shows the real shock test. We really stand the earthquake. We had the building with the earthquake prevention, and we got a 8.5, and we stood strong. So that should think about that just for a second, guys, and kind of take that in consideration real quick. $1 trillion wiped out in 14 days. That's crazy. I mean, I'm not bragging about that. I'm just saying, like, when you really think about the magnitude of, like, people not breaking and really understanding of holding strong and, really here for the future, long term, and, people just understanding, having the education in play, it's a big deal. This is why I like Raoul Pal, because he explains stuff like this. It's stuff that could really go over your head, but it shouldn't, because it's really important to understand. And also, real quick, last tweet before we kind of go over our closing statements. Michael Saylor, Mr. Musk, oh my goodness. We're not going to cover him too much, but you can go back and look at his tweets. So there were some tweets that, he had, and, he's always talking about something, not either it's negative or positive. You never know what's going to come out of his mouth. But Michael Saylor, another one, came out and said, yesterday I was pleased to host a meeting between Elon Musk and the lead Bitcoin miners in North America. The miners have agreed to form a Bitcoin mining council to promote energy usage, transparency, and sustainable, innovative ways worldwide. So this is pretty cool. I thought this was dope. Michael Saylor comes out and says, hey, we're getting all the miners in North America. We're making a Bitcoin council, and this is how we're going to do this. We've all got to be on the same page. And I mean, granted, all the FUD and everything that just happened, everyone hating Elon, like every Bitcoin person, every Bitcoin maximalist, absolutely cutthroat with this guy. Like, I was not pleased by the way a lot of these guys were acting at all. Very inappropriate. A lot of these older guys, grown men too. I was like, dude, come on. Like, you got to have a different, train of thought. And a lot of these older guys did not have that. But fast forwarding forward, to today, I think this was a very good thing that Saylor did. And, overall is kind of needed to be done in the sense of getting things together. So having mining pools together. So we're going to have a council now of North American miners. And, with the with the splitting of, China miners, moving out of China and, kind of finding operations other way, just for the sense of regulation and other things like that. And China's just hard. It's hard to really do anything in China, whether you're doing things illegally or legally. Even legally sometimes it's harder. It's harder to do things legally sometimes it is to do illegally. But, this is something that is a plus, I believe. And, with the renewable energy speak, and this is something I wanted to cover too. This is kind of I'm sorry about the handwriting, guys, but Bitcoin mining pool 1, and I kind of did some tree branches just for, meaning purposes. Yeah. Oh my goodness. Seriously. Oh my goodness. Yeah. No, you were not joking, dude. More appropriate. But going over to this quick little chart, I did a quick little tree arm chart. So cheap power, push for green narrative, and green equals more money. So this is kind of just breaking down to the mining pool. So miners, like we talked about, they need to have sustainable energy, and they will always search for the cheapest source of power. So when they search for the cheapest source of power, that's how they keep their costs down, and that's how they're making the most profit. So when you get all these three lining in action, cheap power, push for green, and green, from that equals more money, you have to pay less power, that takes a whole toll. So that kind of pushes what I think is the green age. And so when you can have mining pools and miners, so let's say just for example purposes, you got a house you live in with buddies, and we already know solar panels exist. We've always heard of the Tesla wall and just solar panels in general. When you get, let's say you got a mining rig in your basement, and you're using 75%, 80% renewable energy, you got solar panels on your roof, or let's say so on, you got solar panels on your wall, and you're using 85% renewable, therefore cutting your costs in half. Not only is that benefiting you, as a business, not only are you making money from this, but now you're also outputting the green age. So it kind of pushes that green narrative. So I couldn't imagine, like, just for example of this, that if, let's say, just like mining is a family business, not crypto mining, but there are plenty of things that are family business, bakeries, welding, shoemaking, like just like the old, not even dark ages, but just the family passed down skill set, is that you can push the narrative for mining green and pushing the green age even further. What's better than people doing the right thing for the planet and getting rewarded for it in income, and therefore pushing that narrative even further, saying, hey, this is something that is useful, it's saving me money, I'm, like most people may not think about it, but hey, helping the planet, and not only that, but now we can start expanding even further and making this more appropriate. So now we don't kind of have that, glooming gloom, even though we've talked about it so often that on a grand scheme of things, yes, the mining is big in its sector. Yes, the power out, but in terms of global, it's not. It's compared to globally, it's nothing, absolutely nothing. Yeah, whenever quantum computing, I think, quantum computing, 5 years, no. Just because you got to remember that those computers got to be stored at like negative 500 degrees. Like it's so hot, the amount of power and hot in it, like you can't have those things in anything above negative 150 or else they fry. And we only have 3 or 5 of them in the world, and I don't think we're even close to being anything near proficient in that at all. And I think most of them are at universities too. And eventually that will come, but I don't think we're on track for that at all. I'll have to do some research on that. Google says maybe 10 years. Yeah, dude, it's definitely possible. Absolutely, 10 years may be possible. I just think it's hard to put that narrative here, just because if they can solve the cooling problem, and there's some other issues as well. I'll have to talk about. I'll have to go take a jump on and take a look at. But yeah, no, quantum is definitely on the way, but it's definitely gonna be hard in the sense of, there are definitely some issues that are gonna have to be fixed if that's something that they want to do. But I think if they're gonna use quantum computing, they're gonna use it for something else. They're not gonna use it for crypto mining. They're gonna use it for, I'd imagine, something probably a lot bigger. I'll have to do some look on that. I'm not 100%. Yeah, I'm not 100% on that. I'll definitely have to read on that. But real quick, to make sure we didn't miss anything, I know today was it was a hard technical day, but it was something that was needed. There was a lot of things in here that we needed to cover just to get things over the hill. Just because we're in a very awkward time right now where you got people split literally in half between a 50-50 between what's true and what is not true. But majority guys, we're sitting just fine, not bearish at all. We still got plenty of room left in this run. And we've talked about lengthening cycle theory. We've talked about, hey, this may take longer than most people like to admit. So there's a good chance that we might see this bleed bull market over into 2022. That is completely fine. We've talked about that. And time is on our side. Seriously, I know a lot of you guys are, younger than 25. Some of you guys are even younger than 30. And some of you guys are over 30, and that's fine. Even if you're over 30, you still have, you still have plenty of time. You're still a young guy, young girl. That's still not an issue. But a lot of you guys are well under 30. So, you should not be stressing at all. You got unlimited time on your side. You got like 8 years, 10 years for compounding. This should not be stressing you at all. And it's not every day that we get to be born at the age of a new emerging asset class that is now going to be permanent in history, which is, I think, pretty crazy. So, definitely glad you guys are here and, beating majority, because I firmly believe there will be one day where we're gonna be having a chat and saying, hey man, you remember 4 or 5 years ago? Yeah, I do. It's crazy times. And then, we will see where we can reevaluate where we are then. But definitely, man. All right, dude. Thank you, Dan, for all the critical. Thank you, dude. Thanks for being up early. I didn't know if you were already up or you just hopped up for the stream, but definitely appreciate that. Gave me some critical thing. I'm gonna do some more research on that quantum and see what their thoughts are, man. Just because I've heard that conversation come up quickly. Especially in a lot of my developer groups, we've talked about that, but I've never really had the full answer. For that. But yeah, thank you for giving me some critical thing. I'm gonna look up on that today. You got the 9 a.m. emails out. Yes, sir. You already know. 100%, man. But all right, guys. If there's no more questions, I think we are good to go. We covered everything. Yeah, we're definitely all good to go. We don't need to hop into charts. We covered that briefly, and we'll save that for either later today or tomorrow. So, alrighty, guys. You guys be safe. Have a great day. Have a great week. I'll see you guys on Thursday. Actually, I'll probably see you guys before then. Just, like always, we'll cover the markets, and if things get crazy, or, I think things are of interest and I think it's important, I'll either hop on live stream or I'll release a video. So, you guys already know. Alrighty, guys. Stay safe today. Have a great day. I will see you guys soon.